gonna start something real quick. Yeah, you can say it. Good morning, traders. Let me know if everybody can hear me. If you have any tickers you want to look at, go ahead and throw them in the chat. Sorry, guys, my mic might have been on. You might have heard all the background stuff going on. Okay, sounds good. All right, so I think there's some people going to be joining us here. Okay, so basically what we're going to go over this morning is obviously welcome to, hold on, let me record this. Okay, welcome traders to the closingprint.com morning webinar. We're going to go over to how to find some actionable ideas for the day. Also how to do some risk management and kind of set up your charts for some areas which I like to use, which I call areas of interest or price areas where price may react or may not react, and we can set up our risk management and stops from that. Getting a couple things ready here. All right. Okay. If anybody has any tickers they want to go over, just go ahead and throw them in the room or throw them in the chat there, and I'll go over those also. So this morning, coming to you from theclosingprint.com, this is Heart Pumper 77. This is for educational purposes only. I may have positions in some of the securities that I will be discussing. Trading involves substantial risk, so please manage your own risk and consult your financial advisor before placing any trades. So the questions we've been getting, or at least I've been getting quite a bit, is how do I find my setups for the day? Now, I'm not usually a day trader. I'm kind of a swing to mid trader, but you can also use 15-minute charts to kind of set up day trades. So the first thing I would tell you is to finding actionable ideas. You have to be, something has to be a catalyst. It has to be having a decent amount of volume, and there has to be something that's going to move the stock, whether that's the institutions or traders coming in for the day. And a lot of people ask, well, how do you find those stocks? One thing I do is I search for relative volume. Okay, the higher the relative volume the day before or as the open is happening, that means either institutions or a large number of traders are wanting to get in those stocks. There's a couple ways you can do that. One of the simple ways is there's this great website called StockBeat. You can sort by relative volume. This is free if you don't have anything on your trading platform. As you'll see, there's a lot of junk stocks in the top of this that aren't large cap stocks. So a lot of these are a lot of bios that we know have stuff that comes out that I don't necessarily want to trade myself. So what I do is I'll sort this by market cap. So this will give us the larger stocks that you can see that are kind of some of the institutional stocks, and then we can scroll down from that and look at those stocks that might be in play for the day. So obviously yesterday NVIDIA had 2.2R volume. Okay, now I'm going to show you a scan that one of our traders in the room does, Grover, that has a large number of stocks on there, and he also does a great sorting job for our volume, and you can look at those as the day starts, kind of after the opening range. But again, what I'll do is I'll just flip down through this and scan it and see if I see anything that's high relative volume from yesterday that might be in play today. So obviously there's Uber, BEKE, Baidu. So those are some stocks. Twitter, 4.4 hour volume. So that may be a stock that's in play. Billy, Baxter yesterday, that's a pretty big cap stock that probably wouldn't be in play. So this is the way you can do it. ENPH, that's a stock that I'm looking at. So we'll go over that real quick. But this is a simple way to do it. Now, Toss and Mini and Futu obviously has been big, and then there was a REIT there also. Toss and many of the other trading platforms can do this real time in the morning. You can run the scan, and you can look to see which stocks are up quite a bit pre-market on volume or relative volume. Here's the other. Hold on one second here. The other scan that we can do. Let me enlarge this for you. Hold on one second. Pull this over. All right, so I'm going to show you Grover's scan on Thinkorswim that he ran, was so nice for us to run this morning. So these are the stocks that had high relative volume yesterday that might be in play today. So obviously this is a large list. So you would probably want to narrow this list down. So you can flip through these charts pre-market this morning within 10 or 15 minutes, and you could look at those and see if any of those fit your trading criteria for the day. So if Brian's on here, let me see if he wants to talk about that real quick. Okay. Are you there, Brian? Yep, yeah. Go ahead. Yep. So go ahead and just give a quick overview of this and kind of how you would use it for the morning or your day.
Yeah, I usually run this at night. You know, at the end of the day, I didn't run it yesterday. I have too many fish on the line, so I really wasn't looking for new candidates. So I usually run this when kind of looking for, you know, I moved out of position. I'm looking for, you know, a new entry into something. And this basically shows me everything that's basically trading with high relative strength and relative volume. And the chart itself here just shows me different, like making sure I'm over the 9 and the 21 exponential moving averages. And it kind of highlights that. The ones that are kind of extreme are the yellow ones. They're maybe a little bit too extreme because they're the percentage over the 9 and the 21. Kind of highlights that those are actually super hot, or they might have a chance to cool back off.
Right.
If it's black, it's just under the 9. So a lot of times I actually like ones that have pulled back to the 9 that are over the 21. So if the 9 exponential moving average is black, and then the 21 is green, that's a candidate for me. So like CF may be one to look at. And on this one, IZEA, I don't know much about either one of those particular stocks, but I want to go look at them now because it's showing me that they've at least pulled back to the 9, and they still have relative strength compared to everything else, and the relative volume was high yesterday.
Right.
So that's kind of how partially used this particular setup.
Right.
When scan and then use this setup to find which ones I would be highly interested in.
Okay, good.
Another thing I look for is yellow bars that are in. I use kind of what they call the part of the strategy called the strat, which isn't a bad strategy. It's basically logical price action following. And I look for an inside bar on the hourly for potential entries. Gotcha. So I'll look for that third column out there. It says strat bar or 1 hour. And I look for a yellow bar on those. So any of those are also candidates I would be looking at. A possible, you know, is it moving higher today? Is it, you know, still within that flag of the 1 hour essentially? Right. And do we have a potential to break out? And so I'll go through those pre-market and look at them, and then I'll look at where the breakout would be of that bar, of that flag, and then I'll go and put a bookmark or an alert and say, hey, alert me if it goes through this, and then I move on.
Yep.
I don't even look at it, but I get alerts all the time that basically will show me, you know, because I look at this and I see that it's on an inside flag on the hourly, and if it breaks the inside flag, that means it has potential for higher.
Right. Exactly. Yeah. Yep. I totally agree. I think the main thing that I'm going to move on to and get across is having actionable alerts. I mean, that's what I'm trying to get across to people in this webinar is we can have 100 alerts, but if they're not actionable at the time, then, you know, you're just chasing your tail and jumping all over the place. And that includes on a daily or weekly time frame also. You know, I could set 200, but are they really actionable alerts where when it goes off, I already have a trade plan set, I can look at it and I already know that I can execute a trade. So I think that's the most important thing of doing your pre-market homework and homework when the market's closed, and getting ready to do that. So,
Yep.
yep. Okay. Awesome. Thank you for the scan. Great.
Mhm.
Okay. So then we're going to move on. So I'm going to close this out here, and then so then once you have your actionable list for the morning, then you go ahead and go to the charts. Okay. So so let's see, EMPH. Let's go ahead. So I'll pull this one up first. This is crowd. This is one I was looking at after market and pre-market this morning. So then when I get ready to go in and set my trade setup up, I'm just setting areas where I want price to either come back to, where it would be a great risk reward for me to get in or break out of. Okay, so if crowd comes back to this area right here around 228, I want to be ready and actionable to get in, and then I know what my risk is. So I have this chart set up. This is 30-minute. You can use a 15-minute. You can use whatever time frame you want. But I have the roughly the 8 and 21 set up from the daily because I'm more of an intermediate term swing time frame trader. So my risk is probably going to be 3 to 5% on these trades, and I want to have the best risk reward on a pullback to be able to get in. And Grover was talking about also on the 9 and the 21 on the daily. So then what we do is we just zoom down a time frame, whether that's a 30-minute, an hourly, or a 15-minute, and then we can get better entries. All right. Then the other thing I'm watching is this volume here. The volume on the pullback. Is the volume on the pullback lower than when we ran through this pivot? Now, a pivot is just an actionable area of price where prices move through. It doesn't have to be an R1. It doesn't have to be an S1. Basically, all it is a place where prices reacted multiple times, and then it's trying to move through that area. So I want to see low volume on the pullback, and I want to see, this has been referred to before, but skyscraper volume when it decides to move these pivots. And that's what we're seeing here. You can see this volume is significantly more than any of the other 30-minute bars. All right. So I want to see high volume whenever it gets to an area and starts to react. Now, do I know if this is going to move away from this? I have no idea. But basically, I'm just taking the probabilities and I'm saying, okay, it's pulled back to an area where I'd like to get in, where this is previously moved away from. Again, we can call this support if you want, but I like to say area. If I call it support, then that already means that I'm biasing my trade, that price has to react at this point, which it may not react. I have no idea what the market and price is going to do, but I do know this, that I'm going to have the best risk reward if price comes down here, gets a wick, maybe forms a couple bars on low volume, and then starts to move away from this area. Okay, so that would look kind of something like this. The price would come down here, maybe we get a couple little bars back and forth like this, and then we form a flag, and then we start to break out this flag and move back up this consolidation area. So I would want to enter on the move above this flag and then a stop below here. So that would be a pretty tight stop on this 15-minute time frame for a $228 stock. So if I wanted to give it a little bit more room to oscillate back and forth, then I could, maybe place it below the 80, okay, which would be a shorter term moving average on the daily, which is shown on the 80 here, that a lot of intermediate time frame traders run. So that's just however you would want to manage the risk. Now, your risk is going to be defined by your position size. At whatever size position you are and whatever your stop is, then that's going to be your total risk to your account portfolio, which I already did a YouTube video on. But I definitely want people to understand that you have to manage risk no matter what time frame it is. All right. So I'm not going to buy this here on a 50-minute time frame and set my stop down here below kind of this consolidation base area and really size up, because that's just going to be way too much risk. So for whatever time frame you're trading on, you have to have your position size and risk match each other. So the other way that I do relative strength is I have this scan. Okay, so we'll do end of the day. And basically, I can just go to summary here in stock charts. You can do this in any of your trading platforms. And I want to see the stocks that outperformed yesterday. We had a slight pullback in the morning, and that's what I was discussing in the room, is what stocks are showing relative strength, and what stocks were still green while the market was pulling back. Okay, those are the stocks that are outperforming the market during the pullback, and those are the ones we want to move on to. So these are the ones yesterday. Obviously, I think everybody, or a lot of people in the room, are having a great trade on MP. Okay, so that may still be in play today. I have no idea, but I would set my trade up if you wanted to use a 15-minute time frame. We could even go to this. Okay, so basically what I would look for today is I'm going ahead and set my areas. This is your consolidation kind of area, It's building this flag right here. This is how you set a trade up. I'm doing this just live so everybody can see it. All right. So this is how I would set it up. This is another area consolidation here. And I think everybody can see this nice, beautiful flag that formed here. All right. And then we had a gap up, obviously. But all this is doing now on price, you see how price was declining on this pullback. All right. That's what we want to see. Even on this time frame, we have to have price decline. Mark Benervini talks about this kind of, it's called VCP action. But basically all that's happening is price is declining, volume is dropping, and the volatility is contracting. If you had an ATR on here, the ATR would be going down. So we have massive volume over here, declining volume all the way through to this area in this flag, okay, and then we start moving back up. So what I want to see is I want to see price move back up away from this area on higher volume. So this volume for me would need to start ramping up or get a large bar, okay, for the trade to still be actionable. Now, we can go ahead and enter the trade, all right, with a small stop. So, you know, if you're entering this trade as it reacts from this area and starts moving back up, then you have a very low risk reward on this trade right here. So, and then we got to look at the backdrop of the market. Okay, what is the overall market doing? Now, I'm not saying tick by tick 5 minute. We're watching, you know, back and forth action on the SPX. I want to know what the overall market is doing. Is it above the 9? Is it above the 21? What's our up down volume for the day? Is it conducive of the market moving higher? Okay. We do have to trade these in isolation and each stock on its own merit, because some of these stocks can show relative strength to the market while the market is pulling back. And when that happens, is those are the stocks I want to be in. So that's kind of how we set it up. If you're going to wait for a breakout trade to enter, then it may have a higher chance of failing depending on what the market's doing. So I would rather buy a pullback if the market is conducive of it and have a lower risk reward here. And then when this starts to move up this way, crossing a downtrend line and then starts to break out, I can add to my position. All right. You don't have to start full positions on these pullbacks. Start a quarter, start of a third of a position so your risk is lower. And then you'll have that that tailwind of a positivity in the trade, whether it's 2, 3, 4% as it breaks the downtrend line, and then you add another piece to it, and then you add another piece to it as it breaks this flag. So then you would go to the daily time frame, and then you would see how this trade is kind of setting up. Okay, so that's why I like to zoom in. As you can see down on the time frames, then the same price action is played out on a daily time frame. Okay, so we have this area here, 34.48. Top of this is roughly the daily previous pivot high area breakout. So if it gets above here, then there's not really much supply overhead and definitely can move higher. All right, everybody see that? So your 34.48 area on your 15 or 30 minute time frame is going to be much lower. Okay, so that's going to be down here when we had this massive breakout. All right, so if it pulls back to there, then we know it's a daily kind of area of interest. All right, so that gives us a little more of a floor to it, and then we can set it up on a 30-minute time frame. So it's the same price action, just zoomed in. If you like to use a 60-minute, then fine. That may give you a little bit longer view, kind of maybe 30,000 feet. So you back up a little bit, and this is kind of the same area that you want to look for if it pulls back here. All right, so just depending on what your time frame is, and if you want to zoom into a 5-minute, fine. That's not something I do if you're day trading, but you can use those time frames however you see fit. You can see this long base that was playing out kind of on the daily and this 15-minute time frame, and this was just a beautiful test of this area right here, a flag, and then a breakout on big volume. Okay, so this is the trade setups I want, and this is the trade setups I want to be able to basically swing and try to hold on to for 10, 15% gains when these start to move. Okay, so let's just, even if you got in somewhere around in here, and we're not going to top ticket, but you took up to here, so it's 13.67%. Even if you took profits. So if you're a shorter intermediate time frame trader, basically you need to be probably taking profits in the 5, 7, 10% range. If you're kind of an IBD, you're looking for the daily to weekly time frames, you're looking at 20%. That's where they suggest to take profits. So that's how you set up your trades. That's how you catch these. Even if you took your first tier, first piece off up here at 5%, then you're you still have a great positive trade. You put your stop at flat, and then you hold on to a piece for the next day, and then you get a nice gap up, and you take another tier off. So your another tier off would be up here at 12 or 13%, and then maybe you move your stop up to under this flag. And that's how we manage these swing trades over days, and then that can turn into weeks if they continue to, run higher. I mean, one that has just been absolutely on fire is this, is this FUTU. If you got into an intermediate swing trade, you still could be holding a piece of this. It's pretty crazy, but you set it up on a kind of daily 60-minute time frame, depending on where you got in. Even if you got in, lower, I mean, you still could be holding a piece of this, which, this has turned into, almost a 100 and 200% move, starting out with a 30-minute time frame where you set your trade up and then moved on and held on to it. So basically that's just what I wanted to go through. Awesome, Rob. That's awesome, dude. Yeah, this has just been a crazy one. Yeah, and that's what these do, these growth stocks. You get into them and you hold on to them, and you leave a runner on, a piece of it on, so hopefully that you can, sorry about that. So hopefully you can hold on to it for a much bigger move. And even if it's a quarter or a third of the position, you can see how the gains just add up. So anyway, so that's kind of what I get onto. Was there any tickers anybody wanted to go over? But basically, I just wanted to explain how you look for actionable trades. Again, you can go by news if you want, surf the Twitter and look for news. But I think the main thing is, for me, it's about relative volume and price action. And that's what I want to see the most of from the previous day and then the morning. And then everything else kind of falls in place. News usually follows volume and price action. Okay. And it's usually not the other way around. More often than not, you'll see the volume and price action start to move, and then we'll see something like, yeah, pins, we can go over that one. You'll see then something will come out like the news on Microsoft. The reason I say this news wasn't really surprising to me is because this was holding up significantly well. It didn't even do anything yesterday in the pullback. Okay. I mean, it didn't even sell off. It didn't even move. Low volume after this gap up, nobody's selling, and it's just holding strong. So that news wasn't really surprising to me at all. And that's pretty much would tell you kind of what's going on. The sellers were committed. Buyers were committed on this gap up. Nobody was selling, and there really wasn't much profit taking either. I mean, we did close lower here. I would have thought that would have been a significantly higher bar, but you can see these skyscraper bars over here. If you see any chart with these skyscraper bars, that means institutions are getting involved. So that should be one that you should keep on your list, and go back to it and keep looking at it until you get a good setup. I know it had earnings, so the setup really wasn't there. But yesterday in our mini market crash, or what everybody was talking about on the pullback, it just pulled back to an area and didn't even break the 80, and that was it, and then ended up higher the rest of the day. So that showed relative strength all day to me. So this would be a stock that would be in play today, for me on that. A couple other ones I was looking at was, let me look here real quick. I think I had some of these set up. And again, this works both ways. Okay, so I had some areas set up, and price action decided to break those areas, come back and test it, and continues lower. So if you're in the shorting mood, this all works the same way. If price fails, that's a good risk reward area to entry to get in. AI, or have a nice position in this one in trend following. So I'm just watching these areas for opportunities to add on pullbacks and see if these areas hold. Again, this is what you do, and then you surf in the morning. After the opening range, you have all these set up. ALGM, possibly setting up a nice kind of wedge triangle there. Big sell volume here, so I wouldn't necessarily look for this to be a long unless it gets back above the 8 and 21 and moves out of these areas. AMWL, just sideways price action there. AXNX, definitely looking for this one today. It might be in play. Big volume on these 30-minute bars yesterday, low volume in this consolidation area. So above this 55.50 area, definitely there's no supply overhead, so you could flip to the daily time frame. So that's what I'd do. So I'd go over here and look at the daily time frame and see what it looks like. It should look about the same. Yep. So no supply overhead. So 58.77 is your pivot. ATR is dropping, which is what we want to see on low volume. So sideways consolidation, low volume. And then if it breaks out above this area on your 30-minute time frame, then that would be an entry. And then you can put your stop, below this flag area, depending if you want to do 3%. You're looking at $1.50, so 5%, you're looking at about $2.50. So your stop would be down here below maybe 54.50 for a move up to 58. So kind of there's a 2-to-1 risk reward ratio depending on what you see on there. So anyway, okay. I'm not going to go through much more. It's already running almost to 9 o'clock, so we'll be getting started in the room. But if anybody wants to discuss that with me, or if you're listening on YouTube, we're at theclosingprint.com. Check us out. We have membership and live chat rooms. We do all kinds of trading. We do have day traders in there. We have swing to long-term traders. Just an excellent group of traders that you can check us out. We're happy to help. We do all kinds of educational opportunities. We want to teach traders how to trade. We don't necessarily want to just give them the trades and then just have an alert type system. If you want to be able to be consistent, you have to track your trades, you have to do your risk management, and you have to be able to find these trades and execute on your own time frames without someone else. So anyway, I hope that helps. Everybody have a great trading day. And if you need anything, you can DM me or find us at theclosingprint.com. All right. Thanks, everybody. Have a good day.